Hello again, and welcome to this stock market game training video produced by the Georgia Council on Economic Education. In this episode, we will answer a common question students have when they first start playing the stock market game. How do you make money? The winning team in the Georgia stock market game is the team with the largest total equity at the end of the 10 weeks, assuming that value is greater than the initial $100,000 and all other rules have been followed. So just how is the team going to turn $100,000 into more than $100,000 in 10 weeks? There are four basic ways: interest payments, dividend payments, long positions, and short positions. Let's start with interest payments. Any money that is retained as cash in the game earns 0.75% annual interest. So, for example, if a team left all $100,000 in their account, at the end of the first week, they would have earned somewhere around $14 and have $100,014 in their account. While this sounds like a good idea and is often enticing to students, there are two problems with using this as a strategy to win. First, with only 10 weeks in the game, the chance of earning an amount of money that will win the game is extremely unlikely. More importantly, you would violate the rules of the game if you did not use any money to purchase stocks. The only time you might want to rely on interest is if the students had some kind of amazing success in the first half of the game and wanted to play it safe in the last couple of weeks. The payment of interest is a great feature of the game in that it teaches students the importance of saving money while evaluating investment choices. A second way to make money is through dividend payments. Dividends are money that is paid to the holder of the stock by the company that issued the stock. Think of it as a way that the company says thank you for owning their stock. Historically, this was the main reason to own stocks. The stock market game accurately pays dividends to student portfolios when they are paid in real life. Again, however, remember that 10-week time frame? Well, for a team to earn significant money on dividends, they have to A, have a large number of shares, and B, make sure the company is actually paying dividends during the game. Some companies only pay dividends once a year, and some, like this company for example, don't pay dividends at all. They reinvest their profits to grow the company in the future. While you can make some money through dividends in the game, it is typically not advisable as a primary strategy to win the game. If a team is evenly divided between two stocks and they can't figure out which one to buy, the dividend payments of each stock may be a way to choose between the two. Interest and dividend payments are great real-life features of the stock market game. But to truly grow a portfolio in only 10 weeks, your students will need to get into buying and selling of assets, and that is where long positions and short positions come in. Holding a stock in a long position is the method most people think about when they think of the stock market. Essentially, a long position is when you have purchased shares of a stock with the hope that those shares grow in value over time. For example, say you bought 100 shares of a stock in a construction company for $30 a share. But your investment at that point is worth $3,000. 2 weeks later, the company goes on TV and announces they have had their most profitable quarter ever, and they have contracts to build dozens of new hotels all across the world. Well, this is great news, and all of a sudden, many people want to buy this stock. All of this new demand causes the price of the stock to rise, let's say to $50 a share. Well, now your $3,000 investment is actually worth $5,000 according to the current market price. Long positions are the most common way students make money in the stock market game. And since the game is based on total equity, an increase in value of stock also increases your equity, so you don't actually have to sell the stock to take advantage of this increase in price. You can also make money when stocks go down in value. This is referred to as a short position or short selling. Think of it as the opposite of a long position. Let's say you've really been doing your research and you discover that company X here has had a very long period of growth, but you've recently noticed that the industry that they're in is starting to slow down. Some of their competitors are starting to lay people off, and sales are slowing. You think it's just a matter of time until Company X hits hard times as well, and you figure that when they do, their stock will lose value as people try to get rid of it. But how can you make money from this, especially since you don't own any stock in Company X? Basically, the way it works is you borrow shares of stock from a broker. You sell those shares of stock at the current selling price and promise to buy them back in the future. What you hope is between the time you've sold it and you have to buy it back, the price has dropped. You keep the difference, return the shares to the broker, probably with a fee, and voila, you have made money from a stock that went down in price. If all of this sounds confusing, don't worry. The infrastructure of the stock market game takes care of all the behind-the-scenes stuff for you. All you have to do is tell the game that you want to short sell, and everything else works itself out. If you want more detail on how short selling really works, go to YouTube and search for the Khan Academy video called Shorting Stock. It provides a clear explanation of how it works. To review, there are 4 basic ways to make money in the stock market game. Interest earned on cash or bonds, dividend payments, long positions on stocks and mutual funds, and short positions on stocks and mutual funds. Most winning teams have some combination of these income earning methods, but the student's focus should primarily be on long and short positions given the game's limited time frame. Remind students that both long and short positions offer the possibility of losing money as well. In real life, investments will vary depending on a person's age, investment level, and personal tolerance for risk. There is no right way or wrong way to invest, and the stock market game is a great teaching tool in that it gives students a chance to experience the different methods and costs or benefits of each strategy.